have some slides for you, so I'm going to put those up.
Okay.
So I shared my relationship with profit has been complicated in the past. So I just want to ask you, does the word profit make you sing or cringe? Because I suspect that for most people have a complicated relationship with the word profit for one reason or another. So what does the word profit mean to you? And a common scenario around the word profit is you walk into your accountant's office. If you're a startup, you walk in your accountant's office after maybe 1 year, after maybe 3 years, and they pull out some financial statements, maybe a little profit and loss, maybe a little balance sheet, sprinkle in some cash flow for good measure. And you're like, what? Are we on the same planet here? Why can't you just tell me what's really going on? What profit? Like, oh, you have $10,000. You have $30,000 in profit. You're like, I don't know where that went. And they're like, oh, and you owe $30,000 in taxes. And the reason is they were looking at last year. And this is a really common scenario, especially with people that are in early stage growth, because maybe you're jumping up into 6 figures. So your profits are increasing, your income bracket's increasing, and they maybe were telling you to pay estimated taxes based on last year, unfortunately. And that's a real bummer. So I'm going to give you a couple definitions of profit.
Okay.
Profit equals money in the bank. That's one definition. So if you see it on paper, but you're not sure where it was, that's a common scenario. Profit equals money in the bank. And so that is one of the things that we practice in Profit First. We make sure that there's money in the bank so that profit actually is really happening. And profit is appreciation points for what you do in the world and for your unique genius. And so there's some people that are actually really uncomfortable with the idea of profit or with the idea of charging people for what they do. And so it's important to remind yourself that this is appreciation points for what you do, and that charging money for what you do, even if you're trying to make an impact in the world, is important. And profit is also funds to be distributed to the owners and shareholders of the business. That's a little bit more of a technical definition. Mm-hmm. So usually I ask people that are more farther along, so maybe not startups, but that have a more established business. How much did you how much did your business pay you last year? And unfortunately, the answer is often either nothing or it's not enough. And that is the sad truth of a lot of small businesses. So I also like to ask the question, how much do you need your business to pay you? And it's more than you think that it is, because we have this horrible tendency to underestimate actually what we need. And the reason is that business owners or entrepreneurs can be optimists to a fault. Mm-hmm. So that's one reason. But the other reason is that in our minds, when we think about all the things that we pay for, and so now I'm talking about money on the personal side, we think, okay, I have to pay my mortgage, I have to pay my rent, I have to pay for groceries, and I only need, X thousand number of dollars a month. Because you're thinking, I need to make this business work, and I only need so much. And I don't know how many times that I have talked to people that say, oh, well, I only need however much from my business. But really, I think you should be asking, how much do you want your business to pay you? Because there are more things that you need to account for. So what if your business paid you enough to cover your current needs, your future needs, and your past liabilities? Because it's not just about covering your mortgage, your groceries, and all the things that you're paying every month. There are surprise expenses that come up. There are, if you have debt, maybe you want to pay that down a little bit more rapidly, and eventually you want to retire. And we have this nasty habit of discounting the future. It's a human tendency. Everybody has it, where we say, that's later, I don't need to think about it. So I'm going to talk a little bit about Profit First. I didn't write the book. When I talk about it, sometimes people think I wrote it, but it is an increasingly popular, it's becoming increasingly popular. A lot of people know what it is right now. Mike Michalowicz, I mentioned him earlier. He wrote it. That's the book. The premise of the book is, we are used to thinking about this formula. Sales minus expenses equals profit. If you have seen a financial statement, if you've seen a profit and loss statement, you've seen this formula. So sales is up at the top, then you would subtract out expenses, and profit is what is left over at the bottom. And he reverses this formula. So sales minus profit equals expenses. So what that does is you pull out the profit first to make sure that you have it. Expenses is what is left over. This ensures that you're always pulling profit out of the business. This is not a new concept. We have had this concept for a long time. It's the old envelope system. You know, my grandmother used to work for a munitions factory. If she took home $100 one week, she would divide it up into envelopes. It might be rent, utilities, emergency funds, groceries, clothing, right? Whatever those 5 envelopes were. And if she took home $100 one week, it was $20 per envelope if we're dividing evenly, right? If she was sick one week and she only took home $50, it was only $10 per envelope. So maybe that means that one week we're eating steak and one week we're only eating potatoes and cabbage. And the thing is that our current financial systems have evolved to allow us to spend more than that 100%. So if we're putting cash into envelopes, everything equals 100%. But now that we have credit cards and we have loans and we have all these fancy financial tools, we can make that equal more than 100% on a regular basis. And this is what gets us into trouble. So what we do with Profit First is we use that old envelope system. We do it in bank accounts. And it's pretty simple. It really simplifies it. It leverages our human behavior. And what we do is we take all of our deposits, we deposit it into an income account, and then we allocate it across 4 other accounts. So there's 5 accounts total. So we allocate it across, and this is the foundational accounts. This is Profit First in its simplest form. We allocate it across profit, owner's pay, tax, and operating expenses according to percentages. And those percentages we decide based on a profit assessment of the business. And I'm not going to go into that here so much, but the basic idea is that we just allocate regularly across these accounts. It's kind of a set it and forget it, because when you do that, you end up with surprise money. You end up with surprise profit. You make sure that your owner's pay is always accounted for. You're always paying yourself. Your tax is always accounted for, so that when you do have that $20,000 tax bill at the end of the year, you actually have money for it. And then your expenses, or that last thing that you allocate, you have money for the expenses too. But you're not going around and just spending money on everything that looks nice and that's shiny. You have a certain money in your bank account and you can spend it. If you don't have money in the bank account, you can't spend it. And I have a slide here that just shows, it's an example, and it's just shows this is probably not the right revenue for a startup, but it's just for an example, and it's based on a $500,000 company. But these are the target allocations. So this is what we work towards over a 6-quarter period. A startup is obviously going to be much lower than this. And I actually set that. I don't set the target allocations for a startup necessarily at these numbers, but it's just to give a sense. And so for the target, what you end up with when you're done implementing Profit First is you allocate profit at 10%. That means for a $500,000 company of real revenue after you're paying for your subcontractors and your materials, if you have those, you end up with $50,000 in profit. You end up with owner's pay of 35% and $175,000 in owner's pay. Your taxes allocated at 15% at $75,000. That means that you are actually not paying the taxes out of your own pocket. Your business is paying the taxes. So that's still a benefit to the owner. So that means that $175,000 in owner's pay that I mentioned, like that's actually your pay, and then you don't have to pay taxes out of that. And then you have $200,000 in operating expenses. That's 40%. Now, these numbers can really vary from business to business. You know, we make little tweaks, but this is just kind of a textbook based on a $500,000 company, what this would look like. And there's a few concepts behind Profit First and why this works. This is really, this is not GAAP accounting. You know, I implemented it alongside GAAP accounting. We do GAAP accounting in your QuickBooks. We still track everything according to all the rules and regulations and make sure that all the numbers line up. But what this does is it leverages human behavior. So one of the concepts of human behavior that it leverages is called Parkinson's law. And so Parkinson's law states that, you know, for any given resource that you have, you will use up that resource. So if we think it applies to time, it applies to money, and it applies to toothpaste. So if you just think about the toothpaste that you have in your cabinet, when you first get that new tube of toothpaste and you like squeeze it onto your toothbrush, when you first get it, it's like the amount, you have this huge glob of toothpaste that just, it's like, it's just dripping over the sides of your toothbrush, right? When you get down to the bottom of your toothpaste tube, you are rolling up the bottom of the tube. You're squeezing. It's like sometimes my thumbs ache from trying to squeeze that toothpaste out onto the toothbrush, right? And then you have this tiny little smear onto your toothbrush because you're just going to get everything that you possibly can out of that toothpaste, you know. But it's, you know, it happens for everything. If you think about any project that you worked on, you know, you will fill the time that it takes to work on that project. There's very few people that will finish a project 2 weeks early. You know, you're always going to take the time that it fills. So the same thing applies for money. You have $2,000 in your operating expense account. You're going to use that $2,000 in your operating expenses. So this is how this behavior applies to Profit First. And so we're just leveraging that human behavior. We want to set aside the profit, we want to set aside the owner's pay, and we want to set aside taxes because those things are important. Right. And then what's left over, we have in operating expenses. Another concept is eating your veggies first. So, you know, I am sitting at my kitchen counter with my daughter, and I do this regularly because she loves vegetables. But if I give her a hamburger next to broccoli, she will not eat the broccoli. She won't eat Brussels sprouts if it's next to a hamburger. But if I put out the Brussels sprouts, if I put out snap peas, like I can't even eat the snap peas if it's in front of her while I'm making the rest of dinner. I have to set aside a bowl for myself because she'll eat the whole bowl of snap peas. So, and this has been shown, I mean, people talk about this when they talk about nutrition, that eat your vegetables first before you eat the stuff that's not so great for you, the carbs or the huge steak, because you want to get those nutrients in first. So in Profit First, we use the same concepts where we are actually allocating the things that are that are good for you. It's actually good to set aside profit. It's good to set aside your owner's pay. And this seems counterintuitive. You think, oh, of course I want to pay myself. But it happens again and again. People will pay their employees before they pay themselves. People will pay for expenses that they think are necessary for their business before they pay themselves. So we say, no, actually, you need to pay yourself, and then we can deal with the rest of your business. So we say, eat your veggies first. And the rhythm's really important. So we just, in the book, Mike talks about on the 10th and the 25th of the month, and that works for about 50% of businesses. But the most important thing is that we're allocating this money regularly. So with some of my clients, we do it weekly. With some of them, we do it on the 10th and the 25th. With some of them, we do it bi-weekly. But the most important thing is that you're doing it regularly and that it's habitual. Well, with a lot of people that have payroll, I peg it to payroll. So that it's just part of your routine. And it just disappears into the background. It just becomes part of your reality. So there is this myth out there that, we talk about business, people say, how's your company doing? You say, oh, it's great. You talk about all the great things that are happening in it and everything's smooth and you're like this cowboy riding off into the sunset and it's so romantic. The life of an entrepreneur is so romantic, and you can throw a stone and you can hear somebody talking about how they're going to start a business. But in reality, on a good day, and for the podcast listeners, the slide up here, on a good day, it's really like being on a buck and bronco. There's a lot of up and downs, and it hurts sometimes. It really hurts. And if we're to be honest, sometimes that horse just gets on top of us and tramples us. And it's important to recognize that. And it's important to realize that it's true in finance, it's true in business. And when we are able to understand that we are not the only person going through this, and when we're able to reach out to the other people in our industry and to reach out to our network and understand that it really helps us to move forward and to grow in our business. So I talked before about change being cumulative, and I see that on the scale of movements. I see it, but I also see it in the smaller ways in business that, we can make changes in business. We can make it when we implement profit first. We can make it so when we implement profit first, those small changes, just setting aside tax, setting aside profit, setting aside owner's pay, that accumulates over time. When you understand that, you're not just supposed to be a cowboy riding off into the sunset, and that everybody running a small business is actually not killing it, it gives you the courage to kind of reach out and solve problems collaboratively. And that is what enables us to build resilient businesses and move forward and make that cumulative change and make positive impact with our businesses.
So where can people find out more?
My website is butterflyrevolution.com.
Okay.
Oh,
and
should I leave that up?
That's the best place. No, I will put that in the show notes. That's the best place to get in touch with you.
Yeah. So my website is butterflyrevolution.com.
Uh-huh.
And the best place for people the easiest way for people to get in touch with me is email ingrid@butterflyrevolution.com. I'm on social media as Butterfly Agent. Okay. So all the various social media, Facebook, I have a YouTube channel. Those are the main ones. Instagram and Twitter I'm less active on. But really, if people want to reach me directly, email is the best way, ingrid@butterflyrevolution.com.